Hi everyone, welcome to today's video. Today we are exploring another article, another market, another opportunity, another scenario where, as always, risk and reward are available. Today we are looking at natural gas, and as you can see on the chart, we have a chart of natural gas here. This is a weekly time frame, and if I was to measure the price movement that took place since the bottom part of this particular week, January 12, all the way to the top that has been traded in today's week, as we can see here, we are talking about 109% return in 14 days. In other words, natural gas prices have doubled, and it's taken a week to 2 weeks. So talk about volatility. This is what we call a commodity crashing up. You probably heard the term market crash. Typically, when referred to equities, that means the market is falling aggressively, going down. In the case of commodities, this aggressive price movement, when seen, typically takes the direction to the upside instead of to the downside.
If our videos help you stay sharp episode after episode, hit pause, like, subscribe, and keep learning. Your support means a lot to us.
Again, here's the example: natural gas, 100% return in less than 2 weeks. Amazing, to say the least. Now, this is detailed with plenty of details, if I could repeat the word detail, in our article that we have published today. In case you're not aware, you can always come to the Tradictive profile page on TradingView, and we have 354 articles as we speak. You can see there are many, and the one that we are discussing today, when commodities crash up 100% and then price gets sandwiched. So here's the article. You can see it's very detailed, and I welcome you to enjoy the read, assuming you like to read. If you don't like to read, or you like to read as a complement,
Are you ready to level up your trading skills? Visit and follow our TradingView Ideas page. You'll get actionable insights and training materials for free. Scan the QR code or use the link on the screen to keep in sync with the markets.
so then let's talk instead of read, and let's go over the idea here. What is happening? Notice that natural gas provides an open gap that was produced in December 2022, all the way here on the left. And when price came in, we can already see some reaction. Price penetrated a little bit inside this particular gap, and from there it started to retrace a little bit. Of course, with such potential momentum to the upside, it may continue going higher, but definitely the open gap from December 2022 is an area of price where we should expect selling pressure. Price was not able to trade throughout these price levels given the huge imbalance between the buyers and the sellers, and sellers won, isn't it? So plenty of selling is expected in that price level. Now, beyond that, we also have a sell UFO around this particular price level, a little higher than the gap, but overlapping the gap by a little bit. So in other words, we have two reasons for sellers to sell aggressively around the current price level and above. So while the momentum is very strong and natural gas has doubled its value in less than 2 weeks, which is impressive to say the least, we cannot get too optimistic about natural gas to continue moving higher. And we should, again, depending on your trading styles and preferences and maybe even beliefs, but we should definitely respect the fact that there are potential sellers in front of us.
If our videos help you stay sharp episode after episode, hit pause, like, subscribe, and keep learning. Your support means a lot to us.
So natural gas may turn around and move in the opposite direction. Now, having said that, if that was the case, a new gap has been formed right at the open. Again, this is a weekly time frame. The bottom part of this candle represents the open of the week, and we can see that the close of the week took place much lower at 5.275. In other words, from the close from the last week to the open of this week, we have an open gap right below price, which, by the way, coincides with this very obvious turning point that was a resistance before, and when resistance is traded through, it becomes technical support. Again, all of those things are not a guarantee of anything, and definitely this is not financial advice, it's just market analysis. But we do have potential for a significant amount of buyers below price within the gray box, which is the open gap, also coinciding with this new support, which may also attract buyers. So 2 reasons to find buyers below price, 2 reasons to find buyers above price. And that's what we mean by the price of natural gas is sandwiched. So it would be very likely, I would think, that before we have a clear confirmation of what natural gas is going to do, which is to do something and then decide to continue and go higher, that's one possibility. Or maybe natural gas is going to do something and then decide to go lower. So that's another possibility. But before that definition of direction takes place, the current chart setup and the various details I have provided in this video, and more if you were to read the article itself, they suggest that price is likely going to have a little bit of back and forth movement between those 2 gaps.
Are you ready to level up your trading skills? Visit and follow our TradingView Ideas page. You'll get actionable insights and training materials for free. Scan the QR code or use the link on the screen to keep in sync with the markets.
So in other words, the white zone between the purple zones is probably very interesting to get to see price move up and down between zones. Now, again, this is a weekly time frame, so that tiny white space look very small in this time frame. But for intraday traders, so now maybe you move to the 1 hour time frame, and now you can have trading opportunities between those zones that could be quite juicy, and even lower than 1 hour time frame. Again, all of these would depend on your style. So the purpose for this video and the analysis that we are going through together is more about understanding the big picture scenario, where are we at when it comes to natural gas. And again, many trading opportunities may form in the lower time frames that could be exploited between gaps. So price comes into the upper gap and a turning point takes place and starts moving to the downside. Maybe that's an opportunity to go short, doing a breakout, using UFOs, depending on your techniques. Price goes down and then gets into the bottom gap and then turns around and starts moving higher. That's an opportunity maybe to take intraday trades to the upside. And again, the techniques that you may use to do that may be diverse. Obviously, at Tradictive, we love the UFOs, but there are many ways on how to approach trading. And that's what you would probably do as a trader, to put your trades in place based on your trading plan. Anyway, so hopefully today's article has also enriched your understanding of the markets a little more. For sure, we don't see 100% moves on commodities every day, so we thought it would be great to share, and hopefully you did enjoy it. See you in the next one.
If our videos help you stay sharp episode after episode, hit pause, like, subscribe, and keep learning. Your support means a lot to us.